In this video, I'll explain the 5-minute Delineator Model Trading Strategy. It is my experience that most people fail at trading for three faults. Number one, they have nebulous goals. Two, they lack a measurable and repeatable method of analysis and decision making. And three, they have poorly designed execution strategies. The 5-minute Delineator Model Trading Strategy is designed to solve these three fundamental problems and provide a basis upon which you'll be able to build your own trading strategies. But please be aware, the model strategy isn't the best or the only way to use the delineator to identify trades. But over the years I have found it's the best way to get a new user off on the right path. The 5-minute operates without regard to the direction of the secondary, following a slope change, which is identified by the white arrows. Once the slope reaches plus or minus 10 or more, the delineator turns either green or red, and a long or short signal is then issued. So here's the model strategy for a long trade. First, the profit target for each model trade is 50 cents. A trade is carried out only if all three of the following conditions are met on each signal. Number one, the profit target must be within the range of the most recent double chevrons on the 5-minute chart. 2. Signal weight must be greater than plus or minus 800, plus 800 for a long signal, minus 800 for a short signal. And 3. The position of the 30-minute primary supports the direction of the trading signal. For example, if the primary is just turned up, the model would not take a short signal against the direction of the primary during that initial phase. Okay, so second is execution. An enter long is made at the slope change up signal on the 5-minute delineator when the slope value closes a bar greater than plus 10. A market buy order is placed at that moment for SPY at the time the signal confirms. When the purchase is complete, two limit orders are then placed. Number one, a limit sell at the target price, which is 50 cents above the signal price. Number two, a limit stop sell is placed 50 cents below your cost. And number three, you will always use the same number of shares for each and every trade. Then you wait. If price moves up 30 cents toward your profit target, your stop loss limit should then be raised 20 cents. If the profit target is achieved, the limit will be filled and the model will be out of the trade. If price reverses and hits the stop loss, the model will be automatically out of the trade. If neither limit order is filled, neither the profit target nor the stop loss was triggered, and the 5-minute delineator changes slope again, it will issue an early exit long, and the slope change down signal confirms removing yourself from the trade, selling out the position at that time. All model trades exit by the close. Positions are not held overnight, and be sure to cancel all remaining limit orders. There is a sequence of the signals that the delineator generates, and let's bring in our SPY trade window, which is where all of our trading information is published at the time the signal is generated. So let's go through the process of the types of signals that are going to be generated. We know that we have a slope change up and a slope change down. Slope change up is identified by the arrow, slope change down is identified by the arrow. The delineator generates an early slope change up signal to give you advanced warning that the delineator is about to change slope, that the trend in the market's about to change. It gives you an early slope change up and then a slope change up confirmation signal. It will also give you an early slope change down and a confirmation of the slope change down signal. When we are in trade mode, however, those early slope change signals are early enter and early exit signals. So let's take a look at an actual trading signal and the signals that are generated during the process. We're looking here at August 8th, and we see that we had a slope change up early in the morning. So let's bring in our SPY trade window, and every time the delineator issues a signal, there's an audio alarm, and the signal is printed in this trade window. So here we see August 8th, 9:50 in the morning. That's the time the signal could confirm, not the time it was generated. An early exit short. We know that an early exit short is the same thing as an early slope change up. And since it's at the beginning of the day, we could not have actually been short. So we were flat coming into the day. The early exit short signal tells us that the delineator is about to turn up at 9:50. We see the signal price 191.30. Signal weight is 148. The Delin number is the value of the slope. The SCP stands for signal confirmation probability, and we'll discuss that a little later on. In this case it says very low. So then at 9:50 the signal confirmed. The slope change up confirmed, the exit short confirmed, and it gives us the price, 191.29. We can also see that the signal weight had risen a little bit here. And notice here that the Delin number is only +3. Remember, the Delin number, which is the value of the slope, has to be greater than +10 to confirm a long signal. So during that next bar, during the from 9:50 to 9:55, once the value of the slope rose above +10, it generated an early spread alarm, the same thing as an early enter long signal. It then gives us the price, 191.29, the signal weight, and the SCP, the signal confirmation probability, which again I'll talk about a little later on, but in this case it shows as very high. Then at 9:55 it generated an enter long at 191.41, signal weight of +550, and a Delin number, which is the slope value of +33. So we can see that at the conclusion of the 9:50 bar the slope value was 3. At the conclusion of the 9:55 bar the slope value was 33. Therefore we know that the change during that period of time was +30 because the value of the slope rose by 30 ticks. So that generated the enter long signal. So we have early exit short or early slope change up, followed by the confirmation of the slope change up, followed by an early enter long signal or early spread alarms, the same thing, followed by the enter long confirming at that time. So that's the sequence of events that are shown in the SPY trade window, and they're published there so that you can see them. There's an audio alarm that'll go off, as I mentioned, and it's horrible, and it is designed to get your attention. Okay, so that's how the signals are generated. We have 2 more parts to go through our process to determine whether to take the trade. First of all, and let me bring back in our trade window, our early spread alarm, which is the same thing as the early enter long signal, generate a signal of 191.29. So let's find 191.29. Here's the time of the early signal, and 191.29 is right there. We know our model trading strategy, we have 3 components. Profit target must be within the range of the most recent double chevrons. Number 2, signal weight must be greater than ±800. And number 3, the position of the primary must support the direction of the 5-minute signal. So first we need to find 50 cents above. So if our 191.29, 191.79 would be the target level. So let's find that. Here's 191.79. Remember, when the signal was generated, these bars weren't there. We're right here. So if we just cover up those bars, okay, so here's our level, and let's push this back this way, and now bear with me here. Let's turn off the volume at price. Let's find our level, and there's our level. So here's our signal price. Here's our profit target. So rule number 1, Profit target must be within the range of the most recent double chevrons down on the 5-minute. So here you can see that we're basically right up at that range. Ideally, we'd want to see the price target come in at this level so that it was below the level of these double chevrons. So it's not ideal, but yes, it's within the range. So that would be check. Number 2, signal weight must be greater than plus 800. Well, we look back here at our trade window. It says that signal weight was plus 359. So that's certainly not plus 800. So that would be no. And in this case, the primary was up. So the profit target was in range. The position of the primary supported the signal, but signal weight was not sufficiently high enough for the model to take this signal. Therefore, the model did not take the signal. So that's the model trading strategy. If you read through the 5-minute journals, starting with this year, you'll see that we go through the same process of analysis and decision making each and every time. We have a target each and every time. We trade with the same number of shares each and every time. And let's talk about that for a brief moment. Why do we trade with the same number of shares? We do that because you can only make or lose 50 cents on any trade. Your stops are there to take you out of a trade either because your profit target was achieved or your stop loss was hit. And if neither of those occurred during the day, you exit the trade at the end of the day. But by using the same number of shares each time, if we do take a loss, and let's assume we take the maximum loss of 50 cents, our next trade we could make that 50 cents right back in one single trade. If you're going to use another security, such as SDS or SSO as a proxy for SPY, then calculate what the exact percentage gain for the target is for the current value of SPY and interpolate that to what the change in SDS or SSO would be to equal that same percentage. And remember, the purpose of the 5-minute model is to teach you a discipline to enable you to solve these 3 faults that I discussed earlier. And before we leave here, let's discuss what the signal confirmation probability is. Let's go up here to our DLIN settings. There they are. Okay. Here's our SCP threshold levels. Signal weight confirmation probability. Very high, high, and low. 200, 500, 800. What this means is the amount of signal weight that would need to change to negate the signal. So if signal weight would need to change by only 200 ticks, so the signal wouldn't confirm, then that's a low probability that the signal will confirm. Because it's very simple for signal weight to move 200 ticks. One moderately sized algo sell program or buy program could easily move signal weight 200 ticks. But it's more difficult for signal weight to move by 500 ticks in a 5-minute period, and even more difficult to move by 800 ticks in that period. So if the signal weight probability is very high, let's move these around here. Here's very high. This meant that signal weight would need to have reversed by 800 ticks within this period. And that's not very likely. If it's very low, here's a low, that means that signal weight would only need to move by 200 ticks to negate the signal. So there's some logic in here for you, and certainly once you work with the program long enough, for a couple of weeks to a month, you'll be able to see these numbers and how they work in real time, and it will be very obvious to you whether the signal is going to confirm or not. So that concludes this tutorial.